Marshall-Jones, when we talk to boards and they reviewing their financial statements, we often have them look out for various red flag warning signs. Some of those examples would include look for an organization that has a liquidity reserve policy. Unfortunately, 33% of nonprofits have no plans to deal with the recession. Another item would be looking for negative cash flows from operations. 50% of nonprofits have less than 1 month of operating reserves. Also look out for internal borrowing of donor restricted funds. Organizations should work to maintain sufficient financial resources to support net assets with donor restrictions. We also recommend looking out for negative or insufficient working capital. 7 to 8% of nonprofits are actually insolvent with liabilities exceeding their assets. We recommend looking out for extended lines of credit or debt covenant violations. We also recommend looking if an organization's endowments or investments have recently suffered a large loss, perhaps due to COVID-19 fears. We recommend looking at new accounting pronouncements that are applicable to your company. Have they been formally adopted in a timely manner? Newer pronouncements for nonprofits include the Financial Reporting Standard, and then there's 2 standards for revenue recognition. One is called ASC 606 and the other ASU 2018-08. And in addition, in a couple of years, the new lease standard will also be applicable. We recommend looking at the footnotes. Do the financials properly tell the story of your organization? And finally, has management properly read, reviewed, and taken ownership of the financials?